Welcome to the deep dive. You give us the sources, we pull out the key insights you need to get up to speed quickly.
Yep, that's the idea.
So today, we're diving into, well, real-time intelligence from space. Specifically, a company called BlackSky Technology.
Right. BKSY.
We've got an article here that talks about their recent performance, and it kind of paints them as this, potentially really important player at the crossroads of AI and satellites.
Yeah, and maybe one that's flown a bit under the radar.
Exactly. The article suggests they might be strategically vital. So, in this world obsessed with knowing things right now, who's building the actual infrastructure for that from orbit?
Well, according to this source, that's where BlackSky comes in.
Okay.
It calls them an AI-powered space intelligence company. And you hit on it. The article specifically mentions they're tackling what it calls a satellite bottleneck.
A satellite bottleneck. What does that mean exactly? Like too few satellites, or is it about getting the info down?
It seems to be more about the speed of getting useful information. Traditionally you wait for the orbit, wait for processing, analysis.
Right, lots of waiting.
Yeah, the bottleneck is getting from raw data to actual intelligence you can use fast.
And BlackSky wants to solve that.
Yeah.
Okay, so how are they doing? This article spends a lot of time on their Q1 2025 results. What did those numbers look like?
Okay, so for Q1 2025, revenue came in at $29.5 million.
$29.5 million. How does that compare?
Well, compare that to Q1 2024, which was $24.2 million. So that's a 22% increase year over year.
22% growth. Pretty solid. What drove that?
The source points to a couple of things. Milestone payments from a big Earth observation contract with India, for one.
International deals?
Yeah, and other international wins, too. But maybe even more interesting were the new contract bookings.
Ooh.
They pulled in over $130 million in new deals just in Q1. That includes a multi-year subscription for their newer Gen 3 imagery.
Whoa, $130 million in bookings.
Right.
That's significant for a company this size. It's really helped their future visibility.
It really does. Their total backlog jumped 40% from the end of last year. It's now at $366 million.
$366 million backlog.
Wow. And their cash position looks stronger, too. Cash and short-term investments hit $77 million. That's up 43% from the previous quarter.
Okay.
The article also notes a $32 million customer prepayment came in. That helps liquidity, obviously, and supports their satellite investments.
So good growth, huge bookings boost, better cash. What about the costs? Are they burning through cash to get this growth?
Well, operating expenses were, let's say, kept in check even with the satellite work. Cash operating expenses did go up to $18.9 million.
Okay.
But the source mainly ties that to integrating LeoStella operations, that company they acquired.
Right, integration costs. And the bottom line, net loss.
Net loss actually improved. It was $12.8 million, down from $15.8 million the year before.
Okay, moving in the right direction. What about adjusted EBITDA? That's often the key metric people watch.
Right. For Q1 2025, adjusted EBITDA was slightly negative at minus $2.6 million.
Compared to positive last year.
Yeah, it was positive $1.4 million in Q1 2024. But, and this is important, the source really emphasizes that management is still guiding for positive adjusted EBITDA for the full year 2025.
Okay. So Q1 might be a dip due to temporary costs.
Yeah.
Maybe that integration, getting new satellites ready.
That seems to be the implication, yes. They expect Q1 was the low point for the year on that front.
Got it. The article mentions two main revenue streams for them. Can you break those down?
Sure. They report imagery and analytics, and then professional and engineering services.
And how did those two buckets perform in Q1?
So imagery and analytics brought in $16.8 million. Professional and engineering services was $12.7 million.
Okay.
Now, the article does note that the imagery revenue dipped slightly year over year. They say that's down to the timing of specific contracts.
Right. Timing can affect quarterly numbers.
But the services revenue, that more than doubled compared to Q1 last year.
Doubled. Wow.
Yeah, which seems to reflect growth in things like satellite integration work, maybe supporting those big international projects like the India contract.
Okay, so even with a slight dip on imagery timing, that huge surge in services, probably tied to those big wins, drove the overall growth. Interesting.
Definitely.
So that leads us nicely into the tech itself. The article highlights their Gen 3 satellites and this thing called the Spectra AI platform. What's the deal there?
This is really their answer to that bottleneck problem we talked about. The Gen 3 constellation, it's not just about taking pictures, it's built for speed.
Speed? How so?
The source says they're getting some of the fastest revisit rates, how often they can image the same spot, and really low latency, like industry-leading low.
Okay, fast revisit, low latency, and the quality.
Critically, yes. They're now delivering imagery at NIRS 6 quality.
NIRS 6 sounds technical. What does that actually let you see?
Good question. NIRS is the National Imagery Interpretability Rating Scale. Higher number, more detail. NIRS 6 is, well, pretty significant.
How significant? Like, can you read a license plate?
Not quite that detailed from space typically, but NIRS 6 means you can reliably distinguish things like individual vehicles, different types of large equipment, or assess damage to buildings pretty clearly.
Okay, so useful detail. The kind defense or intelligence customers would need.
Exactly. That's a key market for them. And the source says customers are evaluating this Gen 3 imagery positively at that NIRS 6 level, which is a good sign.
Makes sense. So where are they with actually getting these Gen 3s up?
The article reports the first one is fully operational, and apparently it's performing even better than they expected.
Always nice to hear.
Isn't it? And a second one is prepped, ready for launch in Q2 2025. So like any time now.
Right around the corner.
Yeah, with more planned through the rest of the year. Expanding the constellation is key for capacity and driving that new revenue.
Okay, so satellites get the images quickly, high res. Yeah. Where does the Spectra AI platform fit in?
Spectra AI is the brain, maybe. It's what turns the pictures into intelligence. Great. Fast. The source describes it as enabling AI-enhanced analytics, real-time detection, classification, alerts. Satellites are the eyes. Spectra AI understands what the eyes see almost instantly.
Okay, I see the synergy now. Fast, quality images meet fast, smart analysis.
Exactly. The goal, according to the source, is faster decisions, using AI to help workflows in defense, disaster monitoring, infrastructure, even economic surveillance.
So it's not just here's a picture, it's here's what's happening in the picture right now.
That's the idea, moving from imagery to insight very quickly.
Now, there are quite a few players in space and satellites these days. What makes BlackSky stand out, according to this article? What's their edge?
The source points to a few things. That ultra-fast tasking to insight speed is number one.
Right, the bottleneck solution.
Yeah. Then the real-time AI-powered analytics through Spectra and also their established trusted relationships, especially with the U.S. defense and intelligence communities. That's highlighted as a big plus.
Trust is huge in that sector. And what about globally?
They mention an expanding footprint. Asia, Europe, the Middle East. Plus, they have an online marketplace for commercial imagery on demand.
That global reach and trust, it kind of clicks with those big contract wins you mentioned earlier, right?
Right.
Huge international deal, India, new U.S. government work.
Precisely. Those wins aren't just dollars, they're validation. Sophisticated customers believe BlackSky can deliver.
Okay, let's pivot to valuation. How does the market view BlackSky right now, based on the info in this article?
Well, when the article was written, BlackSky's market cap was around $355 million.
$355 million.
Okay. And their guidance for 2025 revenue is between $125 million and $142 million.
Right.
So doing the math, that puts their forward price to sales multiple at roughly 2.5 to 2.8 times.
2.5 to 2.8 times forward sales. How does that compare? The article mentions Planet Labs as a peer.
It does. Planet Labs, ticker PL, they operate a much bigger fleet, market cap around $1 billion.
Okay, much bigger company.
And their expected 2025 revenue is higher too, $220 million to $230 million range. So Planet's forward sales multiple comes out around 4.3 to 4.5 times.
So BlackSky at 2.5, 2.8x, Planet at 4.3, 4.5x. That's quite a gap. Why the difference? Does the source explain that or suggest BlackSky is maybe undervalued?
It touches on it. It acknowledges Planet has a broader commercial base, that bigger fleet, things some investors might favor.
Sure.
But the article makes a really crucial point, maybe the key point from its perspective. BlackSky is guiding towards positive adjusted EBITDA for 2025.
And Planet.
Planet is expected to remain EBITDA negative currently.
So profitability, or at least the clear path to it this year, is seen as a major differentiator.
That's what the source highlights. It builds the case for BlackSky being potentially undervalued by listing what they're delivering, that growing base of multi-year high-margin subscription deals.
Right, the stickier revenue.
Exactly. The expected positive adjusted EBITDA this year, the expanding Gen 3 constellation hitting that useful NIRS 6 resolution, those trusted government relationships, and the fact they're actively using AI commercially with Spectra AI.
So the narrative in the article is basically they're hitting their marks on growth and profitability, but trading at a discount to a larger, less profitable peer.
That's the core argument presented, yes. Execution meets potentially mispriced valuation.
Let's zoom back out then. The big picture. Why does a company like BlackSky matter strategically today?
The source uses this really powerful phrase, speed of insight is national currency.
Speed of insight is national currency. I like that.
It reframes what they do, right? It's not just selling pictures. The article suggests BlackSky is building a tech stack that enables this new currency.
So less imagery provider, more critical infrastructure builder.
Exactly. Critical edge intelligence infrastructure, as the source puts it. Think defense, logistics, disaster response, monitoring global events. Everyone needs info now.
Instantly.
Yeah. And BlackSky is building a system designed for that rapid feed. The source also says Spectra AI doesn't just capture the world, it deciphers it.
Deciphers it. Turns data straight into understanding. That highlights the AI again.
It really does. And pulling it all together from the article, the momentum seems to come from multiple things clicking at once. Earnings show growth and improving financials.
The Gen 3 satellite is working well.
Right, contracts and backlog are growing strong, and the next satellite is literally on the launch pad, ready to boost capacity.
It sounds like, according to this source, they're hitting a lot of key operational and commercial milestones right now.
That's the picture painted.
Okay, so let's just summarize what we've unpacked from this source material. We looked at BlackSky's recent financials, solid revenue growth, that huge jump in bookings and backlog, and their guidance for positive adjusted EBITDA this year.
Check. We also covered the tech, the fast, high-res Gen 3 satellites hitting NIRS-6, and the Spectra AI platform that analyzes the data quickly.
Right. And their strategic position trusted by governments, expanding internationally. Plus, the valuation context the article gave, noting that discount relative to Planet Labs potentially tied to that profitability difference.
Yep. The core idea from the source is BlackSky as this potentially underestimated builder of essential edge intelligence infrastructure.
So thinking about that expected profitability, the growing backlog, the Gen 3 rollout hitting key specs, those government ties, if the tech keeps delivering and Spectra AI gets wider adoption, well, what could that mean for their path forward? Definitely makes you want to watch this space, doesn't it?